The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour, 877-927-6648. My pleasure to be here. Today being Wednesday, December the 18th. And let's just look at these numbers. Of course, whatever we're looking at right now is kind of meaningless. I always find that this is really a good time just to go out, come back at about 1:45, or if you're making decisions, as we did for my subscribers this morning, we made some decisions, a particular decision, because the portfolio itself is made up of longs and shorts. Longs are working really nicely, shorts are working real nicely. I didn't really want to change very much, but I did want to add one particular protective measure, so that's what we've done. And we'll see what's going on. Let's just go through the numbers now. We can look at it and say, all right, what are parameters that we need to look for today? On a very short-term basis, the Dow has just started leg B, but it's what I call a gray B. Now, what does that mean? It's real simple. In my methodology, especially since over the years now I've started using that white background, because I know many of you like to print out the charts, unless you're taking out recent highs, in the comeback towards the attempt at getting to the previous high is a retracement mode. I usually call it a retracement failure mode. Why? Because at any point the price could fail. It's underneath the previous major high. Look, there's a down arrow at 16,174 made on the 29th of November. Gone all the way down to 15,703. Let me just double check. I believe right. 15,703 on the 12th. I'll just type that in here. 15,703. And this is a retracement. It's a bounce. Now, what's really important about this is the stochastic did kind of what we like to see. The price did today kind of like what we like to see, using the 9-period moving average as a springboard. But that MACD is not yet turned around. It's just not yet positive. It's sort of flattening out. That green line is still not crossing the red line, and it's really important to be able to sustain and move to the upside. So let's just talk about what we've got right now. Let's move this 120-minute chart away. We've got the daily in a counter-trend rally in leg B. You've got a major top, at least in the shorter term. This is a daily chart from 16,174. That 16,174 turns out to be peak F. Yeah, it could turn out to be a brand new leg A, peak A, and any move above 16,175, that's really very positive, cannot be denied, and it will start to move up. Then I will just have no choice but to give it the notation G/B. And at that point, I'm even going to have to say with a preference to B, and it's very positive. What's my thinking? My thinking is that there's going to be a little disappointment later today. It doesn't matter what's said. It's going to be some kind of disappointment, and that disappointment is going to be translated into, I don't actually see a big smash to the downside, but I do see slightly lower lows and lower highs, at least for the shorter term. And I'm wrong. If the Dow suddenly spikes to 16,030 by tomorrow, closes above that, that'll say, hey, you know what? We're going to retest the recent highs. So we'll make that real clear. Here's the other thing that goes with my thinking, just to make it a summation, because I will not be here tomorrow. Hope to be back on Friday. VIX index is trading at 15.82. On the daily chart, turns out that is a potential peak D. At peak D, can get changes of a trend. I've got a G/C in the 120-minute chart. I'm giving a little preference right now to say that there is a likelihood that there'll be some sort of a pop-up that can take it above 1638. Is that right? 1667 was the high yesterday. And that would just merely extend leg D in the daily, but it will start leg D in the 120-minute chart. And that might be a sudden move, a little whiplash, and then later maybe after Bernanke speaks, maybe at 2:30, going to 3:15, 3 o'clock, 3:15, all of a sudden, maybe we start to see the markets rally. I'm just looking at this and saying, the stocks that we own that are rallying are the stocks that you would anticipate are giving a heads up to say that there's more market strength right now than weakness. If they start to fail and the volatility index starts to go into the 17s for any reason, I really don't care what the reason is. As long as I start seeing 17s that is holding in the volatility index, this market becomes vulnerable. Just make it real easy. I've tried to do that for listeners for years and years and years, especially based on this volatility index. That's what I'm looking at. Now, the stochastic is at 90%. That is very good. The MACD is still strong. It's the weekly chart. Let me just open this up so you can really get a good gander at this weekly chart. The weekly chart it just cannot stop these cup formations that keep failing. But there's a difference. The last low of significance was 11.83 the week of the 9th of August of this year. The most recent one that we just had was 11.99, slightly higher. Well, that's something to keep in mind, because you've got a base here in the 11 area, 11.05, 11.83, and then, of course, what did I say, 11.99? Yeah, 11.99. And that's saying that line of support will be very, very critical. Now, let's just continue along the theme. If at any point in the next, today's Wednesday, going into Friday afternoon on a weekly basis, if there's a close anywhere close to the 17.80 or 18 area in the VIX index, that'll be a big positive for the volatility index and suggest that in the following week, the VIX will creep towards the 1867 level, which is the 200-period exponential moving average, and then challenge the 2134 to 2191 recent highs. If there's a complete failure in the volatility index later today going into tomorrow, you're going to see a real quick drop as the volatility index, which is at 1583, just suddenly plummets to 1520 and then into the 14s. Everything I'm looking at says that is likely not to happen. But as I say, I'm not trying to speak from both sides of my mouth, because the market will favor us if it starts to go higher from here, because we have stocks that have been participating very well. And at the same time, I don't want to ignore a good point made by Peak D in the Den, talking about General Motors and Ford. I don't want to ignore the fact that Ford, one of the things is, for some time we've been in and out of Ford, but I have not had Ford for a while. And then I decided the other day I did not want to go into Ford on the long side based on the weekly doji candle, which was a potential peak F, with the MACD and stochastic turning down. The monthly chart still is quite positive, but it was also the daily chart that was worrying me. But I tell you what really upset me is that with all the fuss and everything, Ford has not got right, and this is what I'm hearing, and certainly going into Consumer Reports and just generally, is that their technology, their wireless technology, the talking aspect, Ford made a real big deal about how you can use hands-off technology, how you can use all the different, using the screen, the touch screen, etc. But there's a lot that's going on here that said that they started off with a very inconsistent and prone to failure system. And when you try to straighten out something that starts off like the healthcare, you start off with a very poor methodology and system. it's very difficult to go around all the different corners to try to implement something that overpowers and becomes something very good. So that to me was one aspect. And the other aspect is that they're talking about the foreign order sales. Well, right now Ford is down 7.78%, down $1.30 at 15.40. That, as mentioned in the den, that smackdown, I do not like to see that. Now, General Motors has done very, very well. It's at peak D. It's amazing how these things happen. Right here at peak D, the second D, in fact, in a buy mode in the daily. And it goes to the high yesterday of 41.85. Let me just put that in there, 41.85. And the next thing you know, plop. The low today is 39.86. Not a big deal, 2 points, but hey. This is leg E in the weekly chart. When I put this whole thing together, when I'm looking at, let's go through my Dow Quartet, GE, which is still acting quite well. We are long GE, but it's got a peak D in the weekly chart, leg E, possibly peak E this month in the monthly. I got to watch this really closely. It's acting well on a short-term basis, high-level consolidation. I said that to subscribers, I want to see the 27.20, 27.30 area actually become a base rather than today's high of 27.24. I want to see it take out 27.40. That was the high. Was it 27.39? 27.39 was the high of the 10th. I want to see that just taken out. Brand new highs. I want to see this in a GE taking out all the most recent highs, start to tackle that whole area of the 20s. They go, sorry, 20s. It's the 30s that we saw way back in 2008. So there's a lot of work to be done. That's General Electric. Let's talk about IBM. IBM, there's number 2 in the list of my Dow Quartet. IBM, nice session today, up $1.65. That H pattern bounce from the 172.57 level I was speaking about Monday, 172.73 times 2 on a weekly basis. That bounce, you know what? I just want to talk patterns real quickly. Let me just show you the GLD here. The GLD is attempting to have that same H formation that I always talk about, the H formation that could have a tremendous springboard. Remember I mentioned the UNG. I'm jumping around charts, but I'm symbols, but I'm not jumping around chart formation. See how that UNG weekly did just the most spectacular breakout? That's what I was looking at. And the monthly chart is saying, whoa, lovely H formation, retest, successful. Can it break? Can it go into the 24? UNG is the United States Natural Gas Fund. Well, this is a very positive chart pattern. Now let's go back to what we were looking at just a moment ago. Up, there's a break. I'll be right back. The Dow's up 49, S&P's up $1.95. Want to talk about these divergences, GM, Ford, S&P, and Dow. I'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pizzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Let me just quickly finish this thought here. So you've got IBM attempting to make that arch formation with a successful rally. That's going to be the question. Can IBM break into the 182, no, let's go 179.50 area, which is say then it's got the capability to go to 180, and then maybe retest the 185 for an H going to an M pattern for the very first time. Remember, the great observation was made for me with one of our Den folks who said, what a great example for my book on chart formations. This is look at those scallops. Look at those H patterns in IBM all the way to the double bottom. Well, look at this. If IBM fails, it's going to I'd say by Thursday, but definitely by Friday, it's going to be under 174. But if it holds real well here and starts to move higher, that could be part of this rotation. Look at Triple M. Triple M is breaking out, trying to retest the 134 all-time high that it made just 2 weeks ago at that peak in the doji candle in the daily, the first week of December. Was that the 2nd of December? 29th of November. Now it's in a very strong leg C, but the stochastic powerful price movement, but not with the technicals. So it could make a double top and failure. I'm watching it real closely. And UTX, my pilot light indicator from the Dow Quartet, is just stuck in this rectangle formation. Just can't go anywhere. It's up 19 cents today. So even in the Dow quartet, you've got a rotational aspect to it, kind of a bifurcated quartet. Now, listen to this. I want to just... I prepared this. I don't want to not do it. Let me grab this. I'm swinging it over here. Look at this chart. I'm hoping that I can get it on TradeStation, because I don't know where the exact low is, but I'm suspecting that I'm correct. And I'm making the round about the late October, before the November turn down, the high that I'm taking as a peak A in this chart of what? It's the Bitcoin chart, the daily chart of Bitcoin, and it's gone A to B to C. These big bars of volume, that's the volume. So I'm going for the inside candles here. So A, B, C goes to a D, and then it goes to an E. And then what does it do? It goes from the 1200 and something area, maybe 1270. And what does it do? It goes all the way to today's low. I think it was around about 455 was the low. And it opens at 715. And it closes at 599. So, yeah, so the Chapman wave methodology can work in any time frame, anything, as long as you could price movement. I believe that's correct. I'm going to try my very best to see if I can get it as a price that I can decipher and do an analysis on based on my TradeStation platform. We'll see. Let me move it away now. So the Dow is up 47 at 15,922. S&P is only up $1.61 at 1782. Comp index is down 6 at 4,071. Look at Apple. We'll go to our callers in a moment. Let me just give you the numbers right now. Apple made a peak F top. What does that say? 575.14. It's trading right now at 545.07. You've got gold up 20 cents at 12.30. Silver's up 11 cents at 19.95. High-grade copper stuck in that range of 330-ish. And crude oil is at 97. You've got bonds down 17.30 seconds to 129.10 seconds. This is going to be very important, because if the TLT breaks 102 support, 102.69 right now, that's going to be quite important. And the dollar, just do this real quickly, EUR USD, you've got the dollar, the euro currency pair, EUR USD, still needs to go to 1.38101. Just needs one fraction higher, and that starts leg D, and that'll also be D in the weekly chart. Then I think it's getting a little bit tired, and that says at that particular point, possibly the dollar could find a little bit of support and start to rally. We're going to watch that real closely, and I think we're done with that. I want to go to our first caller. We've got Mike in Lakewood. Hi, Mike. How are you?
Oh, pretty good. How about you?
Very well, thank you.
Oh, that's good. Yeah, I think you mentioned this on Tom's show yesterday. I've been watching it for a long time. BIS. It's basically the inverse of the.
Correct.
I hear it. I'll hold on.
Okay. So wait. Do you have a position in the BIS?
No, I'm looking to buy, but I'm trying to time it. So
okay.
I want to talk to you about when.
All right, we'll be right back with Mike in Lakewood, California. We're looking at the inverse of the IBB. That's the iShares of the NASDAQ Biotech ETF. I'll be right back straight after this break.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. We are back, and the Dow is only up 41 now. S&P is up 0.95. This is going to be very interesting. It's at times like this when we're trying to analyze the market that you actually have to set aside all the noise and just go for what would be absolutely the simplest thing. And I keep finding that if I try to make it complicated, it just behooves me to eliminate all that nonsense and just try my very best to make it simple. So I'm going to constantly, I'll keep doing it through the show. When we're talking about the volatility index, what levels will be the turnaround point, both up and down, and the same thing for the Dow. Now, we're on with Mike in Lakewood, California. I'm looking at the IBB, which is the root of what Mike actually wanted to look at. The monthly chart is still very strong, having gone to 225.10, and I believe that was in December. No! Oh, I love this. 220, I'm going to put this in here. It's one of the techniques that I've developed over the years, 210. And now what we're looking at is on the monthly basis, you would not see it unless you actually scrolled across to 224.99 to 224.99. This is the technique that I developed that's called the 2-bar reversal. It's a technique that's very subtle. It's very difficult to see. And it says that there is a chance that the monthly chart, if certain parameters are taken out, in this case I would say if 208 to 206 support is taken out, on a closing basis that is, then there's a real good chance that the monthly chart is going to suggest that the 202 to 196 area is going to be the target looking out on the monthly chart of the IBB, that's the iShares NASDAQ Biotech ETF. Now, the weekly chart, although it's turning down, the stochastic's at 86%. That's still very good, but everything about it is turning down. And the MACD made a much lower high when the IBB went to 255.10. So in this particular instance, what I'm looking at is that the technicals are saying they are not as strong as they were before, but on a weekly basis, until I cannot put a down arrow there, until the stochastic goes under 80% and the price closes decisively underneath the 9-period exponential moving average. I actually like to have it 2 weeks in a row, 2 out of 3 in a row, but it would mean underneath 214. And on a daily basis, 225.10 was the high to peak E with a doji high, and we went short the next day at 224.07. It's trading right now at 215.35. Now the BIS is 200% short, and what's interesting, it's making a peak C here. Stochastic's climbing very nicely, but it's still only at 77, not at 80%. The MACD is good. Now, the IBB is right at a point where I would have expected, in fact, today was the day, and what I said to subscribers, since we've been short for a while, is that for those subscribers who have the puts that are expiring on Friday, they've done very well, was to take profits this morning on a good bit of it and keep some. My preference is to say that looking out, I have a target. The moment that, going back to the IBB, the moment that the low of 212.57 of yesterday is taken out, you've got 211.24, which is the 200-period exponential moving average. The way it's acting at this particular point, I anticipated that today, could even be tomorrow. This is the period where you should expect a pretty good bounce, but even today it's only up at 197. It did go to 216.14. It's kind of pathetic when you think about it has been for years one of the absolute leading sectors, the biotechs. Just any excuse, any pullback, and the moment that pullback stopped, the biotechs took the lead and zoomed. I think that that's over for now, and that when I say for now, I might extend that not just to a short to a little bit more than short term, but more to an intermediate term. So I'm going to suggest now, Mike, that you're quite prepared. If you are convinced that you're looking at the right thing, you're prepared to start a position and then add to it a little later, right?
Right. Here's my view very quickly. I'd like your opinion. I think there's 8 trading days left in the year,
right?
And these things have gone almost vertical. If the charts I've looked at, I would think
like
that people,
BIIB and Amgen and all the others. Yes.
Yeah, I would think that people would want to just hold it here. I wouldn't expect a lot of buying, but they'd want to hold for 8 more days so that they can avoid paying taxes for an extra year. So that's why I see strength going into the very beginning of the year. So I was thinking of taking a position maybe, December 31st. I assume the market's open that day, or
yes,
maybe even waiting until January 2nd until all the fund money comes in for the beginning of the year, and then taking a position. Or should I start with a little bit now and ease into it? I'm just trying to get your opinion.
I love your thinking. I thought along those lines, both in this particular instance and in another instance that we had a position, and then I went right back to my roots of the thinking, and that says never, this is you and me, this is not fund managers, never ever hold a position trying to squeeze out a long-term gain when the chart itself is saying, I might not make it to the end of the year. That's number one. Number two is long-term also means 1 year. So that doesn't mean, that would imply that everybody bought on January the 1st and 2nd, that's not really the case. So the thinking, I believe, has merit, but the reality is what I would consider to be far more impressive, and that is that the monthly chart of the IBB is setting up through the on-balance volume and the relative strength index to say that it's probably, and I really have to say probably because it's just, you're absolutely correct, this is one of the most powerful sectors, and it's what fund managers automatically drift to. This is their savior, in fact, this whole year. But I think that it's done. Everything about what I'm looking at says the rallies have failed. Not only have they failed, intraday they've gone. Look at the rally of the 16th of December. It opens at 215.49, screams up to 219.39, and then closes at 215.60. I think there's a problem, and I'm going to suggest this. You don't have to make it big, just start a position in the BIS. Now, I don't know if you prefer shorting, or I know that for some people...
No, in this case, I'd rather just go ahead and buy them rather than trying to short the BIB or IBB.
Okay.
I think it'd probably be almost easier just to buy the BIS, I think.
Correct. So. Now, that's number one. Number two is, for some people, it's difficult in their brokerage account. They do not often get, for instance, those who try to short Sears, and I'm going to look at Sears in a moment for one of our listeners who sent me an email. You can't always get the shares. Some trade station, I believe, has it, and others don't. So
yeah, I'm with Ameritrade, so if it's available, I can probably get it. But okay. I think BIS is easier to track, although I do know how to short it. But there's more limitations about margin and the accounts.
Yeah, there's a whole bunch of stuff. I agree. I'm finding it over the last year or so. I'm actually finding exactly the same thing. So here's my thinking. The BIS has made a peak E in the 120-minute chart. But if we're going to fuss over a point, then I think that's the wrong way to look at it. I would prefer to say to you, I would nibble on a position right here on the BIS at 23.17, realizing that something amazing has to happen in the IBB for the IB to retest its highs of 225, and that would take the BIS down to 21, 33 to 21. 21.09 was the most recent low. I'm suspecting on a worst-case basis, it goes to 22.20, something like that, or any really big bounce in IBB. That's not the issue. The issue is that everything I'm looking at in IBB says that there's a very, very good chance that if the 208, the very, very next important level of support is taken out, it could be a very quick run to 206 and then 204. Once it starts to get to the low 200s, then what that strikes you is the 190s becomes the focal point. Now, I'm not talking about a day or two or three. I'm talking about a series of lower highs and lower lows. So my suggestion, start on the BIS. Any very sharp bounce in the IBB that tries to tackle the 217 to 219 bounce that it had on the 16th, that says that's going to be a critical level, because if it closes above 220.50, well, maybe it's going to have a deeper rally. But the way I'm looking at it right now, there are a lot of people getting out. So my recommendation, start your position in the BIS, and I would add to it over a period. You could even give yourself either numbers that you would add to it, or you could just say, you know what, every 5 days I'm going to add another small position to the BIS. I really do think that the BIS has an opportunity to tackle the high that was made back on the week of the 11th of October, and that's 30.32, if everything I'm looking at works out.
Okay, one other really quick thing. No, I appreciate it. A really quick thing. I'm looking at the BIS chart going back a year, and my screen says the low was 15.42, but I don't see that on the chart. Do you
No.
have a 52-week low for the BIS?
I have the yearly going all the way back to when it came out at 342.
But it's been adjusted since then. I know that.
Yeah, 2109. That's the low I've
great.
got.
Oh, thank you, Basil. I appreciate it. You have a good day.
And good luck with the trade. And I think you're thinking on the part of the tax issue is there, but when the tide turns. And I couldn't even tell you how many people over the years I know that have lost more money waiting for their tax for the year than just getting out of a position.
Right, and the Fed decision today will obviously affect things. It could cause the cascade down and triggering stops, and then BIS will go up or the IBB will drop like a rock. I understand that. So
that's a possibility. My thinking actually is that there's going to be a couple of days of digestion, and that if anything, we just sort of see a little bit of a rollover rather than a very sharp cascade, and even a big bounce, I suspect, will come back and be digested. There's a lot of thinking that has to go on here. It's more the market than what the Fed is doing. It's a fait accompli that they're going to come in at some point. So thank you, Mike. I appreciate it. A great call. Thank you very much.
Thank you. Bye.
Bye. So, folks, let's do this. I promised we would look at the SHLD, which is Sears. Just one of my favorite shorts that's never worked. I don't know what it is. Every time I'm about to short Sears Holding, somebody comes in, and the next thing I know, I say, phew, thank goodness. And the question is, what do you see in Sears? Is it making its annual December low before embarking on a 50% rally? Thanks, Hardy. Well, Hardy, it's absolutely my favorite. I just don't. I went into a Sears a while back, and I don't see very much of a change going on there at all. I actually see more of a change in JCPenney than I do in Sears, and I don't understand it. There's just something wrong there. And they have this scream to the upside. Look, it goes to 38.88 in August of 2030, just a couple of months ago. It screams up to peak A, peak B, peak C to 67.50, and now it's on its way down as if nothing had happened, as if it's at 43.45 on its way back. So I don't think this time we're going to see that kind of a 50% rally. Everything about this says to me this could be Sears' last hurrah. But now, as a trade, that's one thing talking about it. Would I put my money up right now and say I'm shorting Sears at 43.43? I always like to get that pop-up in Sears. Why? Because it always has a pop-up. This Eddie Lambert, I don't know how he plays this, because they talk about it as a real estate deal. They talk about it in every way except as a company that used to have the most fabulous equipment. I mean, those Kenmore machines, washers and things. Many people still have them in their basements, and they're still going strong. So I don't know what's happened to this company. So let's look at it. This is to me, it's the price of 28, between 31 and 28. That's a target for me. Now, the big question is it going to have a big rally? I'll have a look at it during the break. We'll come back, and we'll also then go to Brent in Martinez, California. Oh, a lot of California calls. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I believe that we're all here to contribute something unique, and that deep within us lies a special gift, a special talent, our own bit of genius, just waiting to be tapped into. When it comes to trading and investing, I can help you tap into yours. Hi, I'm Steve Rhodes with TFNN, and on Thursday, December 19th, I'm hosting a 1-hour workshop where I'll share with you my most incredible discovery yet, the Rhodes Momentum Indicator. I developed this tool with one outcome in mind, to do what nobody else considered possible, to put the power of the most advanced indicator, scanner, and trading strategy in the hands of people just like you and me. I can promise you this, you'll never look at a chart the same way again. This event is available to all subscribers to my newsletter service, Mastering Probability, which for the holidays is available free for the next 30 days. No charge whatsoever to new subscribers and no obligation on your part. Please join me by going to the homepage at TFNN.com to sign up for this once-in-a-lifetime opportunity.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. Dow's only up 20 now. S&P's down $1.71. Just before I go to Brent, I wanted to just mention, here at TFNN, we spend a lot of time working on indicators, working on techniques, working on many, many aspects, all of which we're hoping improves our own ability to analyze markets, to analyze charts. I know Steve's done a tremendous amount of work. Steve has a workshop tomorrow night for his subscribers. Please go to the front page, check it out. It's on his Rhodes indicator. It looks really promising. Just great work that he's done, and it should be enlightening. It should be something that you'll be able to use and to use concurrently with whatever other techniques you're using. So please check it out. Steve Rhodes workshop tomorrow night, Thursday night. That's number one. Number two is, I did show you the chart of Bitcoin before. I will try to get a chart. The other is, just real quickly, I just want to say, I know someone very well, a good friend of mine, who's been to business school with just you name anyone, and he's been there, head of Macy's, head of Eddie Lampert, just you name anybody, and he's been there. And he just kept saying to me all the years, he said, don't short Sears. These guys have a lock on it. There are not that many shares out. They're able to do whatever they want. Even if it goes down, you never guarantee that you're safe, because you could wake up overnight and anything can happen. So I suspect it's going to go down, and I've actually avoided shorting Sears, and I'm upset because it gives great opportunity, but that sticks in my craw. So maybe I shouldn't even listen and just say, hey, I got a peak F top at 65 something. I should have just shorted it because it'd be down to 43. But you know what? I do respect that. So I'm just going to say I think it's going much lower, and that's case closed. Let's go to Brent and Martinez. Hi, Brent. How are you?
I'm doing great, Basil. It's so nice to have you back, and I hope you're doing well.
I am. Thank you very much.
I was calling about Triple D.
This is 3D Systems. Yep.
I bought some puts yesterday around $83, and I just wanted your opinion. I don't have a big position. I just started a position yesterday.
What fantastic timing, because what I've done here in DDD, which is trading at 80.24, it's down $1.14. I've got a peak E at 84.85 on the daily. It plunges down to 68.30. It goes peak A, B, C, 1. And then I typed in a peak C2 with the doji candle of yesterday. Why? Because the MACD, it went negative again. Stochastics at 85, but turning down with the on-balance volume. It could go to a D. But right now, the way I'm looking at it, based on the 120-minute chart, I've got a peak D in the 120-minute chart as well. Now we're going to go to the weekly chart, and that is a peak E. And I suspect that any sales going into Christmas for DDD systems with a week to go, I don't know what it's going to be doing. It looks to me like 84, 85 is going to be the top. And even if it goes slightly higher, because you've got puts, you've got a little time in your hands, even if it goes a little higher to maybe 86.30 or something, my looking at this says there's a real good chance that if 79 to 78 support goes, this thing's going to go really quickly to the 75 area. The monthly chart is in an extended leg E, possibly going to be a peak E this month if it doesn't break 84, 85. I think you're in a... Now, this is a hot stock. People love these stocks. It's like the Tesla of 3D printing and 3D objects. But I think for a sharp decline that can take you to 74, 72, I think you're in the right position. So best of luck with that. I'd say just be a little careful. If you don't want to take any heat, 84.20, I'd take something off then. Hope that helps you. So, folks, I'll be back. I hope to be back on Friday. We're looking at this, make it real simple. A close above 16,030 on the Dow says, hey, you can retest the highs. Volatility index springing into the 17s says, oh.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.